Welcome to The Explainer. Today, we're jumping into a real market mystery. It's kind of like one of those movies that starts right at the end. Moments after some amazing news, the whole market just crashed. All right, so let's start right there, at the end of the story. You had the U.S. Federal Reserve delivering what everyone thought was fantastic news. And what happens? The S&P 500 and Bitcoin, which were absolutely flying, suddenly take a synchronized nosedive. Boom. Just like that. So you can imagine this left investors just scratching their heads. I mean, the stage was perfectly set for a huge rally, but instead, we got a complete rout. So what on earth went wrong? Okay, let's rewind the tape and see if we can find the culprit. Well, it turns out the market had, shall we say, a bearish joker up its sleeve. And this card got played after the trading day had officially closed, catching pretty much everyone completely flat-footed. And that joker? It was the tech giant Oracle. Now, because of its huge role in cloud infrastructure, its earnings report is seen as a major bellwether for the entire AI sector. And the news was so bad, so concerning, that investors immediately saw it as the first potential domino in a much, much wider collapse. And this number right here, it just perfectly illustrates the market's immediate gut punch reaction. Oracle's stock absolutely plummeted by around 11% almost instantly after releasing its numbers. I mean, for a company that big, that is a massive, massive move. So you gotta be asking, what in the world was in that report to cause such a widespread panic? Well, the answer is all in Oracle's financials. And this, my friends, is where the plot really thickens. Okay, so take a look at this. The story these numbers tell is, well, it's pretty wild. First off, despite all the hype around AI, Oracle actually missed its revenue targets. That's a huge red flag right there. But it gets worse. The company is sitting on a mountain of debt. We're talking a staggering $127 billion, and it's literally burning through cash. This just sparked this huge fear that maybe, just maybe, the AI boom isn't the guaranteed profit machine everyone thought it was. But to really feel the shock of Oracle's report, we need to jump in a time machine and go back just a few hours. Because the market's mood, it was completely different, all thanks to the Federal Reserve. So the Fed, led by its chair Jerome Powell, came out with what we call a dovish tone. Now, what does that mean? In simple terms, it means they signaled an easier, more supportive policy. Think lower interest rates, more stimulus. And let me tell you, this was exactly what the market had been begging to hear. So Powell basically gave investors a giant green light. Go, go, go. He held interest rates steady for the third time in a row. He talked about buying up treasury bills. I mean, he gave the market everything it wanted on a silver platter. And the reaction? It was immediate. Pretty much every asset class you can think of, stocks, bonds, gold, oil, they all started to soar. And this right here, this sets up the central conflict of the day. You have the Fed's powerful message of optimism, running headfirst into the harsh, kind of ugly reality of Oracle's balance sheet. Yeah, this slide just lays it out perfectly. It's like a tug of war. On one side, you've got the Fed's big macroeconomic message, right? Easing policy, providing liquidity, all pushing the market up. But on the other side, you have Oracle's grim reality, weak revenue, overwhelming debt, pulling everything right back down. It really suggested that the whole AI-fueled economy might have some serious cracks in its foundation. So when you lay it all out like this, the sequence of events is just wild. First, anticipation builds. Then, Powell gives the green light, and boom, the rally is on. Stocks, crypto, everything's surging. And then, the joker. Oracle drops its report after hours, and it's like someone slammed on the emergency brakes. The entire rally just evaporates, and markets plunge. And all of this brings us to the big takeaway from this whole crazy episode. And really, it leads to the one question that every single investor is now asking themselves. So what's the big lesson here? Well, it's that in today's market, a single powerful story, like the AI boom, can become so important, so all-consuming, that bad news from just one key company is enough to completely override even the most positive signals from the world's most powerful central bank. And that leaves us with one final and pretty provocative question. So, did we just see the first domino fall? Is Oracle just an isolated case of a company that mismanaged things? Or is it a critical warning sign that the foundations of this entire AI-driven market rally are not nearly as strong as they look? Only time will tell. If you found this video helpful, be sure to smash that like button and subscribe so you don't miss your next daily edge. More news in our Telegram channel in the first comment. See you next time.